Have you ever noticed that, even without living in the United States, your life changes when the dollar rises? Gas prices go up, food becomes more expensive, trips get canceled, and investments go on alert. Crises that begin thousands of miles away cross borders in seconds and impact governments, companies, and ordinary people all over the world. It doesn't matter whether you use the real, the euro, or any other currency. There is an invisible force that connects all economies, sets prices, moves markets, and determines who wins and who loses in the global financial game. This force is the US dollar, a single currency that has become the foundation of international trade, energy markets, global debt, and national reserves. But how did we get to this point? How did a national currency come to control the global economy? And why does virtually the entire planet depend on money it cannot print? Today, you'll understand how the dollar gained this power, why it continues to dominate the financial system, and why, until that changes, no economy is truly isolated from what happens in the United States. When we say that the dollar controls the global economy, it's important to clear up a common misconception right from the start. This doesn't mean that the United States gives direct orders to other countries or formally controls their economic decisions. The control happens in a much more subtle way, and precisely because of that, it is far more powerful. It is embedded in the structure of the global financial system, in the rules of international trade, and in the way money circulates between countries, companies, and markets. The dollar has become the backbone of this system. It functions like a universal language of money. Countries that do not trade directly with each other use the dollar as an intermediary. Companies on different continents sign contracts in dollars. International banks operate predominantly in dollars. This creates an automatic dependency. To participate in the global economy, it is necessary, at some point, to access the US currency. Without dollars, trade simply does not happen in the same way. In addition, the dollar is the world's primary reserve currency. Central banks accumulate dollars as a form of protection, stability, and security. In times of crisis, political uncertainty, or economic collapse, what do governments and investors do? They rush to the dollar. This strengthens the currency even further, because the greater the fear in the world, the greater the demand for it. It is a self-reinforcing cycle. The dollar is strong because the world trusts it, and the world trusts it because the dollar is strong. And it doesn't stop there. The world's main commodities, such as oil, gas, soybeans, iron ore, and gold, are priced in dollars. This means that even if a country produces these resources, it remains exposed to fluctuations in the US currency. When the dollar rises, the cost of these commodities changes for the entire world. That's how a monetary decision made in the United States can affect inflation, economic growth, and the cost of living in dozens of countries at the same time. This, in practice, is what it means to control the global economy. To understand how the dollar became so powerful, we need to go back in time, more precisely, to the end of World War II in 1944. At that moment, the global landscape was one of destruction. Europe was devastated, Asia was in reconstruction, and much of the world's economies had lost stability, reserves, and credibility. The United States, on the other hand, emerged from the war strengthened, with its industry intact, massive gold reserves, and an economy capable of supporting a world in need of rebuilding. It was in this context that the Bretton Woods Agreement was born. The agreement brought together the major powers of the time and established a new global financial order. It was decided that the dollar would be the central currency of the international financial system, backed by gold, while all other currencies would be linked to the dollar. In practice, this turned the dollar into a point of convergence. Any country that wanted exchange rate stability needed to hold dollar reserves. It was as if the dollar had become the axis around which all currencies revolved. International trade, investments, and global financing came to depend directly on the US currency. But this system began to show weaknesses over time. In 1971, the United States made a historic decision. It abandoned the gold standard. From that moment on, the dollar no longer had a physical backing, something that, in theory, should have drastically weakened the currency. After all, if it was no longer tied to gold, why would the world continue to trust it? What happened, however, was exactly the opposite. The dollar did not lose strength because, by that point, the world was already completely dependent on it. Countries were already trading in dollars, holding dollar reserves, and carrying dollar-denominated debt. Banks, companies, and governments had structured their financial systems around the U.S. currency. The dollar stopped being merely a currency backed by gold and became backed by something even more powerful: trust, global scale, and systemic dependence. From that point on, even without gold, the dollar continued to be the central pillar of the global economy. Now we arrive at one of the most powerful pillars of the dollar's dominance: oil. Energy is the foundation of any modern economy. Without oil, countries do not produce, do not transport, and do not grow. And the detail that changes everything is that, regardless of where oil is extracted, in the Middle East, Africa, Latin America, or Asia, it is traded almost exclusively in dollars. This is how the so-called petrodollar emerged, one of the most efficient mechanisms sustaining the power of the U.S. currency. In practice, this creates a silent rule in the global system. If a country needs energy, it needs dollars. Even if it has no direct political or commercial relationship with the United States, it still needs the U.S. currency to fuel its economy. This forces governments to hold dollar reserves, companies to operate in dollars, and banks to structure their financial contracts in dollars. Oil, which should be just another commodity, ends up functioning as a permanent engine of demand for the U.S. currency. The effect of this is deep and continuous. Countries accumulate dollars not by choice, but out of necessity. Central banks hold large dollar reserves to ensure energy security and economic stability. Instead of the dollar depending on the world comes to depend on the dollar to function. And the greater global energy consumption becomes, the stronger this dependence grows. It is a system that reinforces itself every single day. That is precisely why no other currency has been able to replace the dollar to this day. It is not enough to have a large economy or a stable currency. A currency must sit at the center of the planet's most essential transactions. As long as oil continues to be priced in dollars, demand for the U.S. currency will never disappear. And as long as that demand exists, the dollar will continue to occupy a position of power that extends far beyond the borders of the United States, a power that is silent, structural, and extremely difficult to break. Today, more than half of countries' international reserves are held in dollars. Central banks around the world keep the U.S. currency as a strategic safeguard because it offers immediate liquidity, global acceptance, and trust. In practice, the dollar functions like financial insurance. It can be used at any time to import essential goods, pay external debts, or defend a country's own currency during periods of instability. For governments, these reserves are not a luxury, but a necessity. The dollar ensures continuity in foreign trade and provides a minimum level of stability during currency crises, recessions, or external shocks. When local currencies lose value rapidly, it is the dollar that acts as an anchor, allowing countries to continue purchasing energy, food, and essential inputs. That is why the dollar goes far beyond being a simple currency. It becomes an instrument of economic security. In periods of global uncertainty, this role becomes even clearer through the so-called rush to the dollar. Investors sell risky assets and move into dollar-denominated assets, which are seen as the safest in the world. The greater the crisis, the stronger this demand becomes. And unlike other currencies, the dollar does not weaken during moments of global chaos. It strengthens, further reinforcing its dominant position in the global economy. Now imagine the following: countries and companies around the world borrow in dollars. This happens because the dollar is the most widely accepted, the cheapest to finance, and the most reliable currency in the international market. The problem arises when the dollar strengthens. At that moment, those debts automatically become more expensive, even if nothing has changed in the local economy. The amount to be repaid increases, interest costs pressure budgets, and emerging economies, in particular, begin to feel the weight of this dependence. And who controls the value of the dollar? The Federal Reserve, the central bank of the United States. When the Fed decides to raise interest rates, the dollar becomes more attractive to investors around the world. Global capital seeks safer and more predictable returns, causing money to flow out of emerging markets and back into the United States. This movement weakens local currencies, makes imports more expensive, and increases inflationary pressure across multiple economies at the same time. The impact is not limited to exchange rates. Global stock markets suffer, investments are postponed, and governments are forced to choose between economic growth and inflation control. All of this happens because a decision made in Washington reshapes the flow of money across the entire world. This is how the power of the Fed turns U.S. monetary policy into a decisive factor for the stability or instability of the global economy. Over the past few years, many countries have begun to question their dependence on the dollar and to seek alternatives. China, Russia, and the BRICS bloc openly discuss de-dollarization, creating bilateral agreements, using local currencies for trade, and even proposing new international currencies. These initiatives reflect a clear desire to reduce the influence of the United States over the global financial system, especially in a world increasingly marked by geopolitical tensions and economic sanctions. But the truth is that replacing the dollar is far more difficult than it seems. A global currency needs to combine trust, liquidity, political stability, and a deep, transparent financial market. It must be accepted everywhere, in any crisis, without question. And to this day, no alternative has been able to deliver all of this at the same time. Not the euro, constrained by internal divergences. Not the yuan, controlled by a strong state. Not cryptocurrencies, still volatile and unstable. For now, the dollar still has no true equal substitute. The dollar does not control the global economy by chance. It occupies this position because, over decades, the global economic system has been structured around it. International trade, energy, debt, reserves, and investments pass, directly or indirectly, through the U.S. currency. It is not just about political or military power, but about a financial architecture that connects countries, markets, and economic decisions on a global scale. As long as this structure remains in place, the dollar will continue to be the main engine of the global economy. And understanding this mechanism goes far beyond mere curiosity or academic interest. It is a real advantage. Those who grasp the role of the dollar can better interpret crises, anticipate market movements, and understand why certain decisions directly affect their own finances, even when they seem far removed. In the end, knowing how the dollar works is understanding how the world really operates behind the numbers, and this completely changes the way you see the economy, investments, and your own future. If this video helped you see the dollar and the global economy in a different way, give it a like and subscribe so you don't miss our upcoming content. Here, the idea is to go beyond the surface and understand what really moves money in the world. Also, drop a comment below. Do you think the dollar will continue to dominate the global economy, or could this power shift in the future? See you in the next video.